One company that weathered the week better than most was the toll road operator Transurban, which this week announced that it had almost doubled its profit to $112 million. It was a performance that vindicated the decision 3 years ago to kill off the debt-driven Macquarie model for owning infrastructure. I spoke to Transurban Chief Chris Lynch just after he released his results on Thursday. Chris Lynch, I'm interested in what the traffic flows that you're seeing say about the economy. I noticed in particular that CityLink in Victoria in the second half up 6% or 6.2%, but M2 traffic was down in the 6 months to June, and N5 not up, not very much. So is there something going on between Victoria and New South Wales that you're seeing?
No, Alan, I think the traffic numbers are pretty much very predictable. So if you're looking for any sort of underlying economic outcome manifesting through the traffic, I'd say very much business as usual.
You've just been through a lot of refinancing. How much exactly did you end up refinancing?
Well, over the last few years, we've refinanced probably $4 billion on various project-level debt and some corporate-level debt. We're now through that phase. We were able to do all of that successfully, no matter where you were in the GFC cycle. Obviously, refinancing costs have come down in recent times, and this year we've got virtually nothing prospective that has to be refinanced in the FY12.
And how much did you save in interest?
Well, if you go to the underlying interest rates, they've moved over variously, but the spreads from the worst of the GFC to now are probably down anywhere 50 to 100 basis points.
So has that saved a fair bit of money for you? I mean, are you able then to pay more distribution as a result of that, for example?
Well, the distributions have been very strong. If you go back to when we reset the distribution policy back in the middle of 2008, we set the first of the reset distributions was 22 cents for FY09. FY10 was 24 cents. FY11 we've just concluded was 27 cents. And we've issued guidance now for FY12 at least 29 cents. So it's been a very strong distribution growth, and I think that'd probably be fairly unique in that last 3 years to see that sort of solid growth.
Yeah, well, one of the first things you did when you took over was declare that distributions are only going to be paid out of cash, no more paying distributions out of debt.
Correct.
Which was a sort of a line in the sand at the time, wasn't it?
It was, yeah.
And do you think that moment actually was the end of the Macquarie model for financing and structuring infrastructure?
Well, I think it was certainly the change from, I think most companies in the space adopted a similar sort of policy, and I think whether it's the Macquarie model or whatever, I think Macquarie did do a lot of work in the early stages of that process. But I think the reality was that easy and cheap debt wasn't going to last forever, and the idea of borrowing money to pay straight out the door just seemed anathema to me. So.
But the distribution policy you've got now, is that going to restrict how much money you've got to reinvest in the business?
Well, what it does, by definition, it pretty much puts us in a position where if we have anything substantial in terms of growth, we need to take it back to the market, back to our shareholders, and see whether they agree with our view of a transaction. Now, we've been able to do that on, for instance, the Lane Cove Tunnel last year. We raised $630 million to fund that acquisition. Some of that was equity, some debt. So we're comfortable that if we see a deal that we think is value-adding and attractive for shareholders, that they'll support us when we need it.
So you're more or less ruling out internally funded growth, are you?
Well, we have some capacity. So, for instance, if we were to receive approval to proceed on the M5, we have that in our balance sheet ready to go. It's a fairly modest sum of equity required, about $100 million in our balances. So that we can do off the back of our own balance sheet that's there now. But if there was anything that was substantial in nature, we would, by definition, be back to our shareholders.
Because you really ought to be taking over Connect East, shouldn't you? I mean, instead of CP2, which has made the takeover offer.
Well, when we consider anything like that, we primarily just view it totally from a value proposition for our shareholders, and you know, that's the way that we'll make any assessments we make on.
So what do you think? What do you think of the price they're bidding for Connect East?
Oh, it'd be inappropriate for me to comment on that, Alan. For any transaction that's sort of live in the market, we value.
So is it live? I mean, you know, is it from your point of view? Is it live?
Well, I think you've seen some shareholder comment about, you know, whether or not there's a higher price that could be paid from the CP2 consortium. We have a view about our valuation of it.
But you can get synergies that they can't get.
Well, that's true.
So watch this space.
That's your projection on that, not mine. But I think the key thing, really, from our point of view, is that if we see ourselves as the logical owner or a logical owner, we're interested, and that's there. But I think the key thing really is around. It's always going to be a function about what value we see in it for our shareholders.
I think there's some one or two Brisbane roads that might be available as well.
Well, there's one that's on the market as we speak, but it's the key issue for a toll road is traffic, and then there's always a right price, but it's a function about, well, has that been
that
realised?
one in Brisbane got their projections wrong, didn't they?
Yeah, in simple terms, yes.
So how important to your future growth, leaving aside acquisitions like that, is the widening of roads? I mean, you get the impression that most of these tollways were actually too narrow when they were built.
Well, you will always have some capacity, but inevitably they congest and they reach saturation point in the peak hour. So you've always got capacity there during the day, but the peak hours will always be the first thing that I would saturate. But when we look at growth, we can see growth, underlying growth will come. By way of example, the M5 peak hour now starts to establish at about 5 a.m. If you went back to 1996, the peak hour would start to establish at about 7 a.m. It now goes through till about 9:30. So the peak spreads, people solve their own problem, and I guess if you apply it to yourself, if you hit congestion having left home at 7 o'clock, you probably leave about 1:45 and see how you go with that. And that's the sort of thing that happens on a grander scale.
Thanks for joining us, Chris Lynch.
Thanks very much, Alan.